This one, you're going to be asked to do the journal entries, and it's giving you information also on the revenue. Okay, so you can do the full sales transaction. You can do the revenue, and I think it says assume cash. You're selling them for cash. Okay, um, it's giving you information on the different unit costs, and it's telling you when the sales transactions happened, which bikes from which kind of bucket of costs were sold. Okay, so you'll have to use specific identification to kind of fill out this table and then do the journal entries, kind of like what I was doing on the board. Just read very carefully what they're asking, read the different values that they're giving you, and try to figure this out. Just to get you started, you can just say you have a starting balance, and it's telling you that you have 12 bicycles at $42 each. So my starting balance is 12 at 42, and so my total inventory value is just $504, which is 12 times 42. Okay, and now you're gonna have uh, sales transaction here. You're gonna have some purchase transactions, and you're just gonna fill out this table and see if you can use the information in the table to then translate it to doing the journal entries. The journal entries are really the important thing. That's what's kind of changing your accounting system and is going to eventually translate into your financial statements. So this table here is kind of just to help you do that, okay, to keep track of the different inventory layers. Okay, all right, so go ahead and start that, see if you can figure it out. So look, we have our starting balance already. We already entered this in. We have one purchase transaction. So we're going to do August 16th is the date of the transaction. It's saying we're buying 40 bicycles at $68 each. So quantity 40, unit cost $68. And so the total cost, the total value of this purchase is $2,720. So just make these dollar amounts to make this clear. Okay, so now in our inventory, we have the original 12 at $42 each, which is worth $504. And then we have 40 more units at $68 each. Okay, so let's just be clear. We have a total of 52 units, and the total value of those 52 units is $3,224. Okay, so let's just do the journal entry for this August 16th. Okay, so August 16th, we're buying inventory, so merchandise inventory. It's going to be debited. And I don't know, we can assume accounts payable. Okay, just it doesn't explicitly tell us, or actually does it? Let's see, purchase. Yeah, so it says on account, so it's accounts payable, and the sale was also on account. Okay, so um, we just got the number from here. This is the total value of that purchase. Okay, so that's our journal entry for the first transaction. Any questions on this? Anyone confused? Yeah, because it told you here, it is kind of hidden, but it says the merchandise inventory was on account, and also the sales transaction is on account. Okay, so now we have our last, there's only 2 transactions in this month, and it's saying that on August 31st, we sold 36 bicycles, and it was for $84 each. So actually, Luis, I told you something wrong. Your sales transaction is missing half. You did one part of it, but you didn't do the other part. Okay, so let's just do the cost of goods sold, and then we'll finish. We'll do the full journal entry. Okay, so it's saying that we sold 8 at 42 and 28 at 68. So 8 plus. Let's just be clear. We sold 36 total. 28 plus 8 is 36. So this is how we're accounting for those 36 units. Okay, 28 of them were from this bucket basically. So 28 were priced at $68 each. and then 8 of them are for $42 each. Okay, so the total of my cost of goods sold is $2,240. Okay, so what do I have left over? Let's just get our ending inventory balance. So we had 40 of these units. We sold 28 of them. That leaves 12 of these $68 units. And we started with 12 and we sold 8 of the $42 units. So we have 4 of those left. Okay, so the total value of the inventory ending balance is $984. Okay, so now let's do the journal entry. So now we have the cost of goods sold here. And it's also telling us how much we sold them for. We sold them for $84 each. Okay, so every sales transaction, again, has 2 journal entries. So let's do the revenue first. And it says they were sold on account, so their account receivable and sales revenue. And it was 36 units, and we sold them for $84 each. Okay, so sales revenue, everyone good with this? How we got this? Again, it was 36 bikes were sold for $84 each. Okay, now we do the second journal entry, which is cost of goods sold and inventory. And I just calculated that right here. Okay, so now let's just do our T account for inventory, just to make sure that we're correct and lined up with what we just calculated. So I had a starting balance of 504. That was the value of my inventory. Okay, and I had this purchase transaction, debit. And then I had this sales transaction, credit. Okay, so now let's find out what our balance is. And we see here that our ending balance of inventory is exactly the same as what we have here in our more detailed table. Okay, so that's your check to make sure you did this right. That this quantity on hand, the total value of the inventory should be the same as your T account if you're just tracking the totals.